The Calgary real estate market continues to be a hotspot in Canadian real estate, as prices have increased 8.5% year over year, which relative to what's happened in Toronto and Vancouver, which are mainly flat, is a serious deviation from the trend. And in this video, we're going to talk about what's happening to the Calgary and the Edmonton real estate market, why it's so hot, how it continues to get better, and what you need to know about buying in the Calgary real estate market if you're looking to do that in the next 12 to 18 months. But before I get into it, my name is Nolan Matthias, and if you want the latest Canadian real estate and financial news, this is the place for you. So do me a favor, hit the subscribe button and hit the like button so more people like you can see this video. Okay, so let's get into it. Let's look at the Calgary Real Estate Board's stats package, and then I am going to jump into the Edge Analytics, which is my secret weapon when it comes to looking at the Canadian real estate market after I take a look at what's going on with the Calgary Real Estate Stats package. So as you can see, total residential prices are up 8.5%. The total residential price, this is the benchmark price, is $608,000. And as you take a look at detached home prices, semi-detached home prices, row pricing, and apartment pricing, you can see all of these values are going up significantly. What's really surprising though is the condo pricing, which is up 17.5%. And there's good reason for this, which I'll show you in a minute. But that being said, these same trends that are happening in both Toronto and Vancouver are kind of happening in Calgary. Sales are down compared to last year. New listings are actually down compared to last year, but inventory is up. And this is largely because the sales to new listing ratio is increasing, which means there's more months of supply, which means there is an opportunity to maybe get a better price, or maybe it's just you won't have to compete for properties and end up in a bidding war. But what's happening in the Calgary real estate market is definitely bucking the national trend. And I want to show you the Edge Analytics here because the Edge Analytics on the Calgary real estate market and the Edmonton market for that matter are very interesting. In fact, Edmonton's market is outperforming Calgary's, while Calgary's is outperforming the rest of the country. And if you take a look at the Calgary monthly home sales, what you can see here is that unlike other areas of the country, which saw a significant decline in 2020 and are starting to see their numbers start to decline back to those 2020 levels, Calgary's home sales are still well above what they were in 2020. And if you take a look at Edmonton, you can see the same trend to an even greater degree. And the year-over-year change in sales in Calgary is down slightly. It's up significantly in Edmonton. And when you look at the number of condo sales in Calgary, that is up, and that is contrary to the rest of the country, which is seeing their condo sales go down and the condo prices start to show signs of significant stress. Now, when you look at the detached homes in Calgary, those sales are down, but look at them in Edmonton. They are continuing to increase. And this is even as new listings start to, as Ben calls it, tick up. Because yes, there are more new listings coming to market, but that being said, there still seems to be an influx of buyers in the Calgary and Edmonton market to support the increased number of listings. In fact, I would call the Calgary and the Edmonton markets very much balanced markets as opposed to buyers markets like we're seeing in Vancouver and Toronto. And as you can see, the sales to new listing ratio is quite high, especially relative to the rest of the country. It's actually higher in Calgary than it is in Edmonton, which shows signs of upward pressure on pricing, which is exactly what we're seeing. But when you take a look at inventory levels, and keep in mind that in Toronto and Vancouver, these numbers are the highest they've been in almost a decade, the number of new and active MLS listings in Calgary and Edmonton continues to be at the low end of what they've been for the last 10 years. And while Calgary has an increase of about 6% in active listings, Edmonton's active listings are down 15 to 18%, which means that Edmonton market is starting to see inventory get sucked up, which will eventually lead to higher prices. But nonetheless, both of these markets have significantly less active listings than what's available in much of the rest of the country, and especially when you look at it relative to what's happened in the previous decade. So these markets are showing signs of strength. And the reason why is because relative to the rest of the country, they're still affordable. And when you have some markets that are unaffordable and some markets that are affordable, the market forces will naturally move people from where they're unaffordable to where they are affordable. And keep in mind that in Calgary, the average income is still pretty close to what you would earn in Vancouver or Toronto. And this is what it ends up looking like from an MLS benchmark house price index standpoint. We've seen Calgary's prices go up to record levels. Edmonton's prices aren't quite back to where they were in 2021, but they're getting there. And you can see that the Calgary prices are up 8.5%. Edmonton prices are up around 6%. And regardless of if you're in Edmonton or Calgary, pretty much all types of housing are appreciating in value. And this is where it gets interesting because unlike Toronto and Vancouver, where we're seeing more condos being built, we're seeing more rental properties being built in Calgary and Edmonton. Now, this will put downward pressure on the resale market, but it also shows that there's some balance in the types of properties that are being built, and that will lead to less supply, which means that Calgary and Edmonton's market, barring any sort of oil disaster, are probably going to be a lot more stable in the coming 12 to 18 months than many of the other markets. So if you had to ask me, where should you buy if you're looking for a property to live in, I would definitely tell you that if you can get a job in Calgary or Edmonton, they're probably two of the best places in Canada to live. Now, if you're investing in Calgary or Edmonton and you aren't familiar with the market, here's what you need to know. When oil prices change, the Alberta economy changes significantly. And when that happens, housing prices tend to fall or diverge from the national trends, which means when people from other provinces buy investment properties in Calgary, they're often left holding the bag when all of a sudden the prices don't do what they expect them to do. So just because Calgary's market looks like it's going to be stable doesn't mean that if you don't understand the market and understand it well that you should be investing here. Now, if you understand the market well, you understand investing, you've got a good backstop, and you're not worried about prices not appreciating, well, that's fine. But keep in mind that there were people in Calgary who bought properties to invest in 2006 that didn't see them come back to 2006 values until 2021, which means they had to hold those properties for 15 years just to break even on them. Now, for me, here's where it gets concerning because Calgary still has a lot of housing starts. We have a lot of immigration, which means this should be pretty balanced. But look what's happening in Edmonton. There aren't as many housing starts, and it's a more active market than the Calgary market right now, at least relatively speaking. And what this tells me is that the Edmonton market could see more price gains even as the rest of the country sees price decreases. And what it also tells me is that Edmonton has a lot of work to do when it comes to making their market attractive for builders to show up and actually build properties. But as Ben points out in the last line here, he remains bullish on both Calgary and Edmonton, but very bullish on Edmonton for now. And there's really good reason for that. But you have to keep in mind that when it comes to the two biggest cities in Alberta, there's one that is very much white collar, one that's very much blue collar, and when things get bad, there's one of those two economies that will suffer more than the other. And I'll tell you right now, it's not Calgary that suffers as much when there's a turn in oil prices or something that negatively affects the Alberta economy. So if you're looking to buy or invest in Alberta, it remains a really great place to buy. It remains a really great place to invest. And if you need a great realtor or a great mortgage broker, check the links in the description below. I'd be happy to hook you up with either. Because at the end of the day, you don't need a good realtor when it comes to buying in places like Calgary and Edmonton. You don't need a good mortgage broker when it comes to getting a mortgage in Calgary or Edmonton and making sure you have the right type of mortgage that can handle the fluctuations in the economy. You need a great realtor and a great mortgage broker. And I take that so seriously because the difference between a great realtor and a great mortgage broker and a poor one is having somebody who has your back and will tell you that maybe now isn't the right time to buy, or maybe that property that you love isn't the right type of property for you to be buying, and will ultimately have your best interests at heart rather than just their own, which often revolves around the commission track. Oh, and if you want to see what's happening in other markets in Canada, make sure you check out this video right here because the contrast compared to Calgary and Edmonton is quite, well, disturbing.